What's going on, Zingers? Welcome back to another Futures Fever episode. I'm your host, Kevin Dubriske, and do I have some good stuff in line for you guys? We're going to go over what is Apex Trader funding and how you, any retail trader, could profit with a prop firm while putting very little of your own capital at risk. It's really great. If you haven't heard of prop firms till now, make sure you stick around. And if you have, but you're curious on if you should get started, make sure you stick around to drop any questions you might have in the chat. Now let's get started. All right, guys, so what's on today's agenda? I'm going to show you guys how to profit with Apex Trader funding, some live market insights and trading strategies, and we're also going to be doing a giveaway. So guys, make sure there's going to be a form in the comments that you fill out for a chance to win a free Apex Trader evaluation account. So let's get into it. Why trade with Apex Trader funding? So Apex Trader funding provides traders with funded accounts. First, they give you an evaluation account. Once you pass the eval, they give you a funded account. It's access to firm capital to trade futures markets. We're not trading options. We're not buying or selling stocks. It is just futures markets only. Earn up to 90% of profit, so it's a 90-10 split, but you keep 100% of the first 25,000 you make, which is huge, guys. It's a really good first goal to have. And you trade with peace of mind that there's really zero personal liability. You don't have your own profits at risk. It's very easy to do. And if you blow a funded or you blow an evaluation account, there's no penalty on it. You could start over. It's a three-step process. Hey, what's going on, Katan, Ozzy? Good morning, guys. Hope you guys are doing well. Step one is complete the evaluation account. Let's say you have a 50K account. Your target profit is 3,000 and your trail stop is 2,500. So what you would do is you would have a very tight risk. You'd maybe only risk about 150 to 200 per trade. That will give you the mentality that you could take a loss or two and not blow your account. As traders and as new traders, you guys shouldn't be focusing on making money. You should be focusing on not blowing your account. That should be your first step. Once you're able to really limit and minimize your losses, then you're really able to start seeing those profits roll in. Good morning. Get funded, right? So you complete your evaluation account, you're on the 50K account, you hit 53,000, boom, you close the day out, they email you after, congratulations, you're now going to be funded. You pay the one-time lifetime fee for funded accounts, it's the PA's your performance account, or you can do a monthly fee for those as well. But a lot of times they have good sales on the lifetime PA fees. In fact, they have a really good sale going now, so make sure you guys stick around. I'll cover that sale in just a moment. And then you get paid out. You get a new 50K account, you get funded, and then you are able to get paid out once you're able to surpass that 53,000 again. You know it, Katan. I'm always covering those earning calls. Got to make sure we see the best and only the best. Guys, don't forget, fill out that form in the comments. We're going to bring that up right now for you. Fill out that form for a chance to win a free Apex Trader evaluation account. You could pick any account size you would like, whether it's a 25K account and you want to take it slow, or you want to go extra heavy, go for a 300K account. Now, what are some other benefits of Apex Trader funding? Well, they have a wide range of account sizes, starting from as low as 25K to as high as 300,000. They have simple rules. There's no daily drawdowns. Some other prop firms do have daily drawdowns. Apex does not. They have their trailing stop, and that's it. Competitive profit split. Again, a 90-10 split is huge compared to some other prop firms that might be 80-20 split. And multiple accounts / trade copier software. This is another huge benefit of Apex. A lot of other prop firms might let you trade other accounts, maybe 5 accounts, but Apex lets you trade up to 20 copied accounts. So if you're consistent enough, and let's say you start on a 25K account, you're consistently making $200 a day, but every time you try to move up in size, you psychologically can't do it, and you keep taking more losses than you should, or you're not holding your winners like you used to, then stay with that $200 daily goal and start to copy the accounts. A $200 daily goal is great because guess what? You have 10 accounts, that's 2,000. You have 20 accounts, that's 4,000, all with the same $200 daily goal. And that's where Apex is a huge benefit compared to some other prop firms. And up-to-date trading platforms, they did recently add another broker that you could use. And competitive customer service is phenomenal on it. They have a 4.5 to 4.8 stars on Trustpilot with over 13,000 reviews. So why should you use Apex Trader funding? Who should use Apex Trader funding? Day traders. Guys, if you're a day trader, whether you're in and out of a trade in 2 minutes, in an hour, in 2 hours, 3 hours, as long as you're not swing trading, Apex Trader services are nearly perfect for individuals who prefer day trading over swing trading. Their simple set of rules, along with the opportunity to trade using the firm's capital, make it a good choice for day traders looking to really minimize their risk. And guys, if you consider yourself a day trader, you're not just a day trader, you're a risk manager. You're managing your portfolio, you're managing your risk per trade. Nobody's telling you to go long, nobody's telling you to go short, and nobody's telling you how much you have to risk. That's all up to you. And traders aiming for different account sizes. Again, they have everywhere from 25K to 300K accounts. A lot of people might not have $300,000 of their own capital to trade with. So guess what? Apex Trader funding, prop firms, they can be very beneficial because now you can get a 300K account, and we'll go over the different account sizes, targets, and trailing thresholds as well. Guys, if you're here on YouTube, if you're here on Twitter, make sure you drop in the comments if you're trading, if you trade futures, or if you trade with Apex. Account sizes and 30% rule. So I wanted to cover this again. I covered it last Futures Fever 2, but examples of the 30% risk rule. Now, they do have one rule that's pretty strong, and that's their 30% rule. So they want to make sure that you're not making more than 30% of your total P&L in just one trading day. Whereas same for the risk side. They don't want to see you losing over 30% in one trading day, because that shows them that you might be sizing in too heavy, and those aren't the types of traders that Apex wants to fund. No prop firm would want to fund traders like that because it's inconsistent. We want to show them we're consistent. So a 25K account, your max risk is $450. Your trailing threshold is $1,500. Guys, if you're trading a 25K account, do not risk $400 a trade. That is absurd. You would blow your account in probably 3 to 4 trades, and you would be very upset with yourself, and it would not feel good. You'd be ending up in this loop. Then comes FOMO, psychological misinputs, and it's not a good place. So we want to risk lighter on that. Same with the 50K account. $750 is your max risk because it's 30% of your trailing threshold for new accounts. We still wouldn't risk $750 on a 50K account. That is absurd. And so on for the other account sizes too. Now, the 300K account, it has a trailing threshold of only 7,500. So it's not really that big of an account per se, right? It looks like a 300K account. That's great. But if your trailing threshold's only 7,500, then what that tells me is you really only have 7,500 to trade with. All right, so let's see. So payout requirements, guys. Here's some payout requirements. So if you get funded, you're on a funded account and you want to get paid out, you have to have at least 8 trading days. You must have completed at least 8 trading days. This is not in a row. You could trade 3 days, take off 3 days, trade another 5 days. You could trade 1 day on, 1 day off, 1 day on. It does not have to be consistent. You just have to be consistent in your profits and your losses. Profit on 5 days, so at least 5 of those 8 trading days must show profits of $50 or more. This is another rule that really should go unsaid, because we shouldn't really be having to make that extra 5th day for $50. We should be consistent across the 8 days. And safety net for first. Oh, something I did want to mention too, guys. You got to complete 8 trading days. That doesn't mean you have to be green for 8 trading days. That's where this profit of 5 days falls in line. So if your profit of those 5 green days is consistently $300, $400, that will help you get towards that payout window. Safety net for first 3 payouts. So the safety net is calculated as your drawdown limit plus at that $100. This requirement applies to your first 3 payouts only. For more details, there is more on the Apex Trader website. And profit split, as we said earlier, you keep 100% of the first 25 grand you make, and then 90% after that. Your account must meet the required minimum balance to approve a payout, which includes surpassing the trailing threshold drawdown level. The trailing drawdown in a PA account stops at the starting balance plus 100. Now, minimum required balance, I wanted to make sure I covered this slideshow too, just so you guys could see where your account should be at when you're funded to be able to take a payout. Now, on the 25K account, the minimum payout you could get on any account size, guys, is $500. So you can't take out 100, you can't take out 200. Minimum is 500. So to meet that minimum requirement, hey, good morning, Catherine. To meet that minimum requirement on a 25K account, you would simply need to move it to 26,600. That's only $1,600 of profit on a funded account to then be able to withdraw 500 bucks. That is awesome. It's a 50K account, 52,600, 75K account, 77,850, and so on. I'll leave this up here if anybody wants to take a quick screenshot. Always important to know the information before getting started. And maximum payouts. So we went over our minimum payouts. Now, how about our maximum payouts? So the 25K account, your maximum payout is 1,500. 50K is 2,000, and then it slowly works its way up. It adds 250, going up until we get to the 250K account is 3,000, and the 300K account, your max profit you could withdraw is 3,500. Now, this is a max profit, max payout until your 6th cycle. Now, when you do 5 cycles of 3,000 on a 250K account, and let's say you have profit of $70,000, now you can't take out that 70,000 until you went those 5 payouts of 3,000 first. Once you get those 5 payouts out of the way and you're on payout number 6, there's no longer a payout minimum, or maximum, I should say. You're able to take out that full 70 or 60, whatever profits you're in. No maximum payout after the 6th payout, right? No, so really great stuff. Apex is awesome. And again, this is just their way of proving and showing that you're a consistent trader. Producer FYI, when swapping the futures fever and tech tune up from Ryan, show it doesn't move over. Thank you. Appreciate you, Zach. Always love it. Community is key. Bullish Bears, Benzinga, love all these communities, guys. Guys, 71% sale on Apex traders going on right now. They were just running a 90% sale because they just recently crossed $500 million in payouts. So they have a 71% sale right now. Use discount code FFEVER, that's Futures Fever. This ends June 8th. They have $50 resets with these accounts as well. And this discount applies to the first month and recurring months. So you get 71% off now. And then if you're on the evaluation account and when a month passes, it will bill you another bill, but with that 71% off still. And lifetime PA fees, guys, are only $100 across the board. I was mentioning earlier that PA fees could sometimes be on sale. This is probably one of their best PA fee sales I've ever seen. $100 across the board is huge because when you get a PA fee on, let's say, a 25K account, that is a one-time lifetime fee of about 130, 140. 50K is about 170. 150K is 240. So instead of paying $240 on 150K funded, you're only paying $100. Now, when you say you're only paying $100, that's your risk. Your risk is whatever you're paying for the evaluations and the funded accounts. Do you think the 90 deals may come back? Oh man, I know those 90 deals are coming back, but I also know they just had it running for like a good week or so, and a lot of times they will wait maybe towards the next holiday. They love having their sales on the holidays. All right, so win a free evaluation account, guys. Don't forget, fill out that form in the comments below for a chance to win a free Apex account. Enter by filling out the form in the comments. Last week's winner was Jared. Congratulations, Jared, on your free Apex account. Best of luck with that. Guys, if you do want to join me, I stream with Bullish Bears community. It's bullishbears.com. Stream Monday through Friday from 8:30 to 11 with them. We do pre-market prep, do everything that we might need, and we go over some great setups. We go over some futures, and that's what I want to show you in today's Futures Fever. I want to give you guys an example of a pre-market prep, how to find supply and demand, and we could even go over the orb, which is the opening range breakout. So guys, make sure you hit that like button. I hope you guys are excited for a great Futures Fever show, and let's go over real quick Apex's sale. So 71% off evals, that ends in 4.5 days. They have paid out over $504 million since 2022. Guys, that is on average probably about $11 to $15 million a month in payouts. That is amazing. Name one other company doing that. That is phenomenal. We scroll down, and here's where we have our different plans. So you could get a wealth charts plan. This is a new plan that they recently added in the past month. And what's great with wealth charts is this is a great plan to get if you're doing copy accounts and copy trades, because they have a copy system right within it. Now, they also have a Rhythmic plan. Rhythmic does, unfortunately, tend to have a little bit more issues than the other brokers, just something to keep an FYI on. And then we have our Trade-O-Vate plan. Now, Trade-O-Vate plan is usually the one that I like to use, that I also have some of my members and mentees use as well. And the reason for that is because with the with the Trade-O-Vate plan, we're able to come to our trading view and plug it into trading panel. And then we're able to log right into Trade-O-Vate, and we're able to place our trades right here. And it's so much easier than trading on Trade-O-Vate because TradingView gives us a much cleaner chart and cleaner capabilities and tools. All right. I did want to cover real quick just the account sizes, and then we'll get into some what would be pre-market analysis, how to find our levels, how to find good zones, and some tips to keep you guys out of trading and trying to get that FOMO where you feel like I have to get in this trade. I can't let the market move without me. That is something we have to crumble up, pull out of our heads, and throw away. So guys, I wanted to show you with Apex. Now the 25K account, your trail stop and your profit target are neck and neck. Your trail stop is 1,500, your target's 1,500. Very simple. That's a 1-to-1 risk to reward. Once we get up to the 50K account, it's a profit goal of 3,000, trailing threshold of 2,500. We're starting to separate. Then we get to the 100K and it's a complete 2-to-1. Your profit goal is $6,000 and your trailing threshold is only 3,000. Guys, at this point, you might as well just trade the 50K account because your target is half of this and you only have $500 more of cushion. So that's something to really consider when looking for an Apex account. Let's see. Did they get rid of the 75K accounts? It looks like they got rid of the 75K accounts. That's interesting. That's new. They used to have a 75K. They no longer have a 75K account. You guys heard it here first. I know I didn't see any notifications about that. So very interesting on that. No more 50K accounts, just 25, 50, 100, 150, 250, and 300. And they do have 100K static. All right, so let's get into some charts. Let's get into some futures, guys. Let me know, what is your favorite futures ticker to trade? Do you like to trade the NASDAQ, the NQ? Do you trade ES? Do you trade gold? Me personally, I like to trade the bundle of them, right? I'll trade the ES, the NQ. I'll also look for gold and oil as well. And the reason for that is in case we're getting some choppy markets like we see here today on ES, I'm able to come to a different market, something like maybe gold. Gold was able to give me a really nice long position this morning off of a broken zone. And I'm going to show you guys exactly how I found that zone. So let's go to our replay system and let's bring it to our 15-minute time frame because that's where I found that supply area. Now, right now, let's do replay and let's actually bring it back to, now I do my pre-market preps between 8:30 to 9. So we're going to bring our replay mode back to our 8:30 candle. So at this point, this is what I was looking for on gold. I saw that gold on the daily was trying to move higher out of this range. So I came down to my 15-minute time frame and I saw, okay, well, we had, let's see. Oh, do I have to replay it again? Yeah, I do have to replay it again. Replay select bar, and we'll come to, like I said, the 8:30. So at this point, there were a few things I was looking for, and something I noticed was overnight, we had a 15-minute supply zone. Now, a supply zone is an area where sellers showed an imbalance. So we would get an area where price consolidated, then we would get a strong move lower. Once we get that move lower, what I like to look for is number 2, continuation. This also had continuation. That's great. Now, I also see that pre-market, we came into the supply zone, we rejected it once, we came into it again, we rejected it twice. So I was looking to see if sellers wanted to step in the supply zone. Now, just because this is an area I would consider shorts doesn't mean that I have to be a perma bear. As traders, we have to know not to have a lock-on bias. Once we have a lock-on bias, that's when we start thinking that we have to be right, the market's definitely wrong, and I got to keep taking these trades. I'm in a long, I'm stopped out, I'm in a long again, I'm stopped out, FOMO rolls in, you finally switch your trade, and you just keep getting stopped out. It's not worth it, guys. When it comes to markets, we want to be patient. And the reason I create these pre-market setups is so that I know when price is trading, and I'll delete this zone right here so it's out of the way. We'll keep that zone. This pink level is our opening price. I like to mark out our previous day high, our previous day low, our opening price, and then any supply and demand zones and pre-market highs and lows as well. Now, because this was a supply zone, this also becomes an AOI. That's an area of interest. Now, this is an area around 33.88, 33.90 that sellers were very strong. And I could pull a book map as well to show you guys what I saw on gold. Hopefully it will show us. Let's see. Perfect, perfect. Here we go. So this is when we were in this supply zone. Awesome. Yep. And then there's my entry. Awesome. So check this out, guys. On Bookmap, this is a tool called Bookmap on the left-hand side. This shows us a volume analysis by price versus when we look at candlesticks and the volume on a subgraph, that only tells us volume during that time frame. So when it comes to Bookmap, that's what really gives me an idea of where there's possible strong order flow or weak order flow. Guys, you better be hitting that like button on YouTube. We're dropping some gold nuggets today. So once I saw, the first thing I did see when it came to gold was I saw we had a major seller. We had a few major sellers actually near 33.89 and 33.96. Now those levels fall right in my supply zone. So I saw that we had passive sellers in my supply. And what I do when I am trading is I'll keep my trading view on the right hand side over here. And I will keep my my book map on the left hand side over here so I could sort of gauge them together. I wanted to show you guys the break and retest that I took because it's right here, this 33.88, 33.89 area. So we see that on Bookmap, a lot of red and a lot of orange means there's passive buyers or sellers. Now, if it's above where price is currently trading, these are passive sellers. If it's below, it's passive buyers. So something I noticed was we had a lot of passive sellers sitting in this supply zone, and that's at 33.88. So we'll let price sort of play out a bit. And I saw as soon as we broke, we're on the 15. We're not going to see it on the 15. Entry was on the 5. So we'll come back again one more time. Now, as soon as I saw we had strong buying pressure completely take us through that 33.88 right here, 33.88.9, strong buyer absorbed it. We broke it. We came back and we retested that 33.89 almost perfectly. And that's where I found my long position on gold. Now, it's not just because it was a support, a resistance and now support on Bookmap, but it was also a major key level on my supply and demand. Now, when it comes to my supply and demand, what we had here was we had a break of my supply zone. Now, whenever we have a break of a supply or demand, I like to use it as a flip zone. A flip zone would basically be just that. If it was a supply zone, we break above it. I now want to see it hold as demand. So because we had 33.89, 33.89, that marks right with my 33.88 key level on the supply zone, I looked for us to pull back. And once we pulled back, I was able to take a nice entry long, very tight stop loss, and I targeted just high a day, a little 3-to-1 risk to reward trade right there. It filled me on this candle right here and popped right to my take profit, and I was in and out of this trade. Huge trade, great trade. It was in a couple gold contracts. I got in here. Again, stop loss was here. First scale out was here. Second was at high of day. Now, of course, I could have held this trade because looking at it now, hindsight always being 2020, we were ripping and volume was starting to pick up. And I also had another supply zone that could have possibly been a target. When it comes to supply and demand, guys, it's so extra helpful because when we're finding our zones, we're finding them on different time frame analysis. When we do that, we're finding the ranges in the market on those different time frames. So when we're able to find those ranges, find those breaks, find those trends, reading the market becomes a lot easier for us. Guys, YouTube, Twitter, make sure you hit that like, make sure you hit that share, drop a comment if you're learning something. Let me know what you like to trade. So this was gold. And again, this was a really nice setup on gold that I took this morning. Could have been a much longer and stronger trade. But at this point, we ended up falling back into this new fair value gap right here that we're trying to hold as support. Now, this would be sort of the same situation where if I'm looking at Bookmap over here, I see we have a very low volume shelf. That would be like a low volume node. And I also see at this point, 33.95, this was an area of resistance on Bookmap that we broke through. And now we came right back to it and we're testing as support. So again, if I was looking for any trades on gold here, I'd most likely be taking longs in this area of support. And I might target new high of day, seeing that gold has been able to break higher. I would be a little more concerned and a bit more careful with this trade today, though, because we haven't taken out that previous day high on gold yet. And when we don't take out previous day highs or lows, a lot of times markets will give us a stronger range than we do a trend. but we're still below previous day low. That doesn't mean we don't break it today, right? If we want to start rallying again, bulls stay strong. This 15-minute wants to base here, and then this 15 wants to continue higher and volume steps in, then we might be in for another leg up on gold, and we might see that 34.17. Something else I'd mention on gold, guys, is looking at it on the daily time frame. It's been in a very difficult spot. We just created all-time highs around 35.40, and we since then sold off. Nothing can, yep, nothing could stop the market. You know it, Charlie. And we sold off from this all-time high. Since then, we tried to come back. We created a lower high right here. We sold off, created a lower low, but still held this range. We still held this range. We're still range bound. So right now on gold, intraday, day trading wise, I'd only really be looking for scalps. There is no clear direction on gold right now. Whereas if we were looking at gold back here, when we were rallying, breaking previous day high, closing green, and I'll use a trend line to show you guys. This was our previous day high for Wednesday. Then Wednesday we broke it and we closed green. The next day we broke Wednesday's high, closed green. So this is a much clearer and stronger bull trend. This would be something that we could have more confidence in taking longs in intraday on gold, or even if it was looking like something on ES and NQ. This is just market structure and reading candlestick price action, guys. All right, so we're looking at, this is gold here on the daily. Now, another one, something that I always keep an eye on, everyone, is going to be our equities. Now, the reason I look at our equities is because these are market movers when it comes to the ES and the NQ. So here I always keep up, I have 4 monitors when I'm trading. I have the main monitor for the streaming, the top monitor for my equities, left monitor for my execution, and top left for any chat. So main 2 I'm always watching is my stream screen and my equity screen. And that's because equities have such a big pull on direction when it comes to the NASDAQ and ES. So for my equity screen, I have Meta in the top left, Microsoft top middle, Apple top right, Tesla bottom left, Nvidia bottom middle, and Amazon bottom right. And the reason it's these 6 stocks is because these 6 stocks are in the top 10 holdings of both the S&P 500 and the NASDAQ. Now, because NASDAQ is much more weighed on the tech sector, this is a lot more helpful for trading NASDAQ. Let's see if we could find a great example today. Pull up our NQ and 5-minute. Now, something I want to point out down here, I was able to catch some nice longs off of these lows because I saw that we were failing to push lower. Let's see, excuse me, I do apologize. Dealing with a bit of a stomach bug the past little while now, a couple days or so. So we're going to try to line this up, and we could use our crosshair. You guys see how my crosshair lines up on all the charts we're looking at? So what we could do actually is we could pull this up full screen, and instead of putting Amazon down here, we'll put NQ down here for now. And we could just sort of see how when NQ reversed off of this pre-market low, how were equities trading? Well, it looks like when NQ was reversing off the lows, Nvidia was also at a key level 140, key psychological level, and holding to reverse higher. We see Tesla was also in this blue zone. This blue zone is one of my areas of interest. That would be support. And I also see, let's see, what else do we have? We have Meta was pushing below VWAP and ended up holding VWAP. So you guys see how all of these equities are also finding some level of support, while NASDAQ also finds that level of support. Level of support being took out a pre-market low and we were able to reverse. Pre-market highs, pre-market lows, previous day highs, previous day lows. These are all major price levels because there are so many people watching them. Institutions, retail, they are watched everywhere. Let's see. So let's pull up some more futures. Let's get it going. See what ES has given us. Now let's do a real breakdown, a pre-market analysis, if you would. So the first thing I notice on ES, and we'll get rid of these trend lines. We're no trend line Tory in here. And we'll delete some of these old alerts, and we will see what's going on over here on the ES. If it'll delete them. There we go. So I see ES, same situation that gold was trying to do. We're taking out previous day high. We closed green. This day we took out previous day high, we closed green. Now today we took out previous day high, but we won't know if we close green until we close. And that's going to be for futures at 5 p.m. Eastern. Zach, man, that's funny. It's funny. Somebody in the chat said nothing could stop these markets. Zach has a good point. A single tweet can. Love it, guys. Love it. All right, so let's see. So what I do when I do my analysis, guys, is I'll start on the daily. I'll mark out my previous day high, previous day low. Then I'll mark it down to maybe a 6-hour, which is a higher time frame, bring it down to a 4-hour. And what I saw here on the 4-hour was we had our basing candle. I'm going to turn my drawings off for a moment. And a basing candle, or a demand zone that I like to look for, would form like this. It would give us our red basing with a long wick to the downside and near a low. So this is our higher low. Then I would have an impulse move and continuation. Now, if we have our basing and an impulse move, but continuation fails and we range back lower to this area, it could still be an order block because that was an area where orders were holding, but it wouldn't necessarily be a strong supply or demand zone, in my opinion. Now, that would be my 4-hour demand. I would mark that out with my price level at the open of the candle, and then I would bring my rectangle tool from the open to the low, and this would be my demand zone. So when price enters 59.26 again, if it re-enters 59.26, I'm going to look for longs. Now, this is a pretty strong and pretty wide demand zone, right? Now, on ES, we're never going to trade ES with a 40-point stop loss, and this would require, I don't know, what is that, 17 points? We probably wouldn't trade with a 17-point stop loss either. But because this is a 4-hour demand zone, what we would do is we would then come down to a 15-minute time frame and see if we could find a proper entry based off of that 15. Now, something else I like to do, let's say this is our demand zone down here. Unfortunately, we do have other demand zones above it that we should hold instead of breaking down here. So we'll use this as an example because, again, I wanted to show you guys a good example of how to use a larger zone. So let's pull up our drawing. Where is it? Path. So let's say time goes by and at some point we're trading, we're breaking these demand zones, and we get into the supply. Or let's say even better, pre-market, we were trading near this demand zone, but we didn't break it yet. So if we were opening, let's say, and again, this is all a hypothetical, just an example of how to use these supply and demand zones. If this was our pre-market price action, I would mark out our pre-market low right here, and I would look to hold this demand zone for longs. So I would put my entry point at that sweep low, and I'd put my stop loss. I'd be able to adjust my stop loss depending on where my entry ends up and where we end up reversing. Now, if we get a strong break, markets open over here, we chop around a little bit, we break into the supply zone. If I see it, maybe something on Bookmap or some type of clue indicating buyers are stepping in, I will take that trade almost as soon as I see that buyer step in, because I know we're in a strong demand zone, and I know that if we were selling off into it, there's going to be a lot of retail traders trying to short this drop. And when that's happening, that's when institutions are finally able to fill more of their orders, trapping those retail traders. So that would just be an example of how I'd maybe use this demand zone down here if we were to get down there, and that, again, is because we have a large demand zone. Another way to use larger demand zones, like I said, you come to the 4-hour. This is a 4-hour zone. So I'd come down to maybe a 15-minute or 30-minute, look back at that zone and look to see if we have any pivots anywhere, right? And I see that we sort of based in this area for a little while. So I could maybe use this area as another key level within my demand zone. So now that I have that zone, I could use that as either an entry point if there's passive buyers on Bookmap that are showing. I could use it as a stop loss area, again, depending on where buyers or sellers are stepping in. But now I'm using price action analysis along with my volume analysis to confirm my entries and my trades. Guys, let's take a look at gold. Gold is holding that. Looks okay on gold here. Looks all right. 15-minute, trying to hold bullish. 30-minute. Now, something else I do, guys, and this might really help you guys as well, is when you're trading, if you're day trading and you're on a 5-minute time frame, you have to make sure you're constantly zooming out. What do I mean by zooming out? Well, I don't really mean just zoom out like this. Yes, that helps to see the bigger picture over the range, but I mean zoom out on the time frames. If you're on a 5-minute, make sure you're checking the 15-minute constantly, right? You want to make sure that the 15's trending with you. 30-minute trending with you, hourly. These are all some major 3 pillars. These are 3-pillar time frames right here. 15-minute, 30-minute, and hourly. If you're able to trade with the trend on these 3 time frames but execute on the 5-minute, you're going to have a great time in your trading, and you're going to be more patient and probably miss out on a lot of bad trades. And that's because you're giving yourself a set of rules, a system, and something that you watch. Now let's see here on ES. ES, we have our 15-minute orb. Now, an orb is an opening range breakout strategy. Basically, what you would do is you would mark out the 15-minute high and the 15-minute low of the first 15-minute of the New York session. So that's at 9:30 to 9:45. You'd mark out the high, you'd mark out the low, and a lot of traders will look for a break in either of these directions, or retest within the range, and then take that short or long depending on direction. Now, something I like to use if I were to use the orb, I don't use the orb too often in my trading. I will mark it out every now and then just to keep an eye on range. But something I like to do with orb is, and that's these purple levels here. I'll make them a bit thicker so we could see them. Something we could do with the orb is also just get a read on market sentiment. If I marked out my orb earlier and I was in this broken supply zone, which is now demand, and I'm coming near an area of resistance up here near this key level, well, then I know, guess what? Our orb, we broke lower, we reversed back higher. We weren't able to break higher, we reversed back lower, but we were, for the most part today, trading within this opening range. And when that's happening, that means price action is very poor, it's very range bound, and it is a do not trade zone. It's important, guys, to be able to recognize when markets are giving us a good setup or possible trade, but it's even more important to recognize when markets aren't giving us a good opportunity. Because when we're able to recognize that, hey, my setup might not work in these market conditions because market conditions don't meet my criteria, you stay out of it, cash is a position, you don't take any losing trades. Nuclear bomb. Leonard, man, that's something. I hope not. I hope not. I'm pretty close to the city. All right, let's see, guys. So gold, look at this. Gold trying to move its way out of this demand zone. We have gold here on Bookmap here, and it's trying to pick up some momentum. But we see down here, guys, this is called the CVD. That's the cumulative volume delta. I'm actually going to see if we can move that up higher a little bit so you guys could see it. And the CVD basically reads all of the cumulative volume within that trading session. So if we're bullish on this day, I would want to see a bullish CVD. That means most of the accumulated volume has been buying volume. If we're looking at, say, something like the ES, where ES has been range bound today, if I wanted to look for longs, I would probably be more hesitant because CVD has been moving lower. Yo, Ozzy, man, you know it. Ozzy, one of the best members here in our community at Bullish Bears. We have a joke, right? When we don't know where the market's going, what do we say? We're either going up or we're going down. But when we don't know, right? Because markets can't move sideways unless markets are closed. But we're either moving up and we're moving down. If we're near an area of interest that we know we're either going to break it to have a breakdown or we're going to reverse to hold, that's when order flow, and that's when sitting on our hands gets so important. Because once we're sitting on our hands, we're not wasting profit. We're not wasting our mental capacity on it. And that's really what will separate you from the new trader you versus old trader you. Journaling is super important. That's another thing that's important. If you guys don't have a trading journal, it's important you have one. Come to my website, tradingpioneers.net, and you're going to come down to resources. And I have a free trading journal for you guys to download. It goes over your entry criteria, what went well in the trade, what went wrong in the trade, and things you could do moving forward to help get a better strategy and system in place. I do also one-on-one mentorship as well. I have a, It's a free 15-minute consultation if anybody was interested. I do like offering and helping as much as I can when it comes to our amazing people here at Benzinga and you amazing day traders, guys. I want to help give you guys the education needed to see you guys succeed better in these markets. So right now we see that ES is moving lower, but I wouldn't take these shorts here because guess what, guys? Every time we tried moving into this area down here, buyers stepped in, buyers stepped in, buyers stepped in. And also, see, now we have a few things going on here, and this is what I call a 50-50 trade. And when we see a 50-50 trade, we don't take that. We're not gamblers, we're day traders. We want to trade with probability. Now, I see that our CVD has been moving lower. That's a bearish sentiment. However, I also see volume has been failing, and I also see our session volume profile down here. We have very low volume, and whenever we come into areas with low volume, that's when extra volatility starts to kick in. And when we get that extra volatility, we really want to be patient for it to play out and give us the answer of if we're going up or we're going down. Once we get that answer, it's a lot easier to trade and we can be a lot more patient And again, right, let's say somebody wanted to chase these shorts to the downside here. Stop loss at that recent 5-minute high. I want to see new low of day. Let's see if we could chase this down. Do we think this works? Do we think it hits our stop loss? Guys, what do you think? Let me know in the comments. Do you think a random trade like this, very little backing it, would it work? Would it break? And again, something else we could do, see if where my equities are, is to check where our equities are. Whenever I'm uncertain about the market, I pull up my equities, and if equities look like they're ready to sell off like crazy, that helps give me some confirmation. If I see equities, though, might be at an area that they could support, well, then guess what? I'm waiting out of this trade, and I'm not going to take it. Right now, we see it looks like Meta is trying to move lower. Microsoft, very strong to the downside, it would seem, and same with Apple and Amazon. Oh, nope, that's NQ. Let's do Amazon down here. Amazon also pretty range bound, but not the strongest to the downside on Amazon. Nvidia a bit stronger, but I'd be a little concerned for the fact that we could reverse at any point here on equities and create a higher low. So we'll see how this trade pans out. We were also looking at that possible gold trade, which is also going in our favor. And it's really just a matter of reading volume, being patient, and waiting for the right proper trades. Now we're hitting a key level 59.80 on ES, so I'd like to see how we respond. Now, on Bookmap, guys, you see this big, strong level over here, 6,000. This is where I found, I didn't take that short off 6,000, but I was looking to see if price could move back up there. But every time price moved near the 6,000 area, 59.97, we failed to break it. There was a mass amount of volume here. The ask was very heavy. There was a seller defending price below 59.98, 6,000. Now, at this point, we don't have much support under us, so I could possibly see us sell off, right? At this point, it's a quarter after 12. A lot of the traders that only trade that morning session have walked away. This could be a pretty good setup right here. This could possibly go to the downside. Selling pressure starting to step in here with a little bit of strength. We have some resistance above head as well. So we're just going to wait and see on that. This would be a no trade zone for me, even though it could possibly work. Just because we're looking at something that could possibly work doesn't mean we have to take that trade. And guys, guess what? This trade could work right now, could pan out, and that'd be great, right? But I didn't have my entry. I didn't have a proper stop loss. Because guess what? If you're taking a trade down here at the lows, that's a very risky trade. We saw that buyer stepped in. Now, something I'd rather look for instead of trying to trade chasing the lows is I would mark out our previous low that we created, both of them, because now our pre-market low at 825 wasn't taken out and our low from 1005 wasn't taken out. So it looks like sellers are trying to step in to sweep this liquidity. Now, at this point, I wouldn't look for shorts right here targeting this low. I'd much rather see how we react when we take that low out. Now, of course, this morning I had a pre-market plan of a demand entry on the ES. And that's right here. So yesterday, guys, if most of you remember, we had a beautiful rally on ES. It really just grinded up all day. With that being said, we created a 15-minute basing. We had our area of support right here around 59.59. This is also a key level, and we rallied from there. So I was looking for pre-market today, see if we could open somewhere down here, make our way lower about 20 points, and then reverse. Right now, we are not getting that. At the moment, we're currently trying to move lower, so it's not out of the question. What we could do, because I know after this show I'm going to be walking away from my monitor, is I could add an alert. If I add an alert at my demand zone down here, and then on TradingView, you could double click it, go over to message, and you could leave yourself a little note. So if you have your alert set to send to your phone, you could say ES 15-minute demand 59.59. Perfect. Now I have my alert, I have my notification, and when that happens, I'll be alerted and I'll be able to take out my phone, come back to my home office, and execute that trade accordingly. Let's see. So we see that ES is moving lower. We had 15-minute basing, a sell-off, a basing, a sell-off. So right now, selling pressure is definitely pushing more towards the downside. Now, again, though, I'd be a little concerned on taking any shorts this far lower. This really probably would have been where we wanted shorts. Well, obviously, ideally, we would want to short the highs and buy the lows. And it sounds easier said than done, but quite honestly, it's not too difficult if you're trying to really simplify your charts and simplify your trading. You trade supply and demand, you trade support and resistance, whatever the case may be. As long as you're consistently looking for these levels, these zones, these areas, you're going to be a lot more patient. Here's 59.80, and guys, we see that. Look at this. ES is trying to pull back a little here. Anybody that was trying to chase shorts and said, oh man, we're breaking lower, I got to take this short right now. Boom, they just got stopped out real quick. That's why also, if we're looking for a trend lower, we're better off shorting it when a candle is green, because what we could look for is we could look for that candle to flip back red if there's still enough time in that candle. Right now, it being a 5-minute time frame, that could possibly be a pretty good entry there. But we'll have to wait, because now at this point, look at this guy. So on Bookmap, these red levels are areas of support. So right now, buyers are trying to step in. There's a lot of aggressive buying coming in. We want to be a little patient at the moment, because again, we don't want to short these lows either. Shorting the lows, buying the highs, that is not the move, guys. We'd much rather trade our trend, wait for a retest if we're in a trending day. Let's see. So ES looks all right. Looks like it does want to break out. We can take a look at the NASDAQ too. I know a lot of people trade the NASDAQ. Now, guys, right down here, I think I covered it last week too, but this is our weighted index. And that's basically those bundle of stocks that I mentioned earlier, all on one screen. So if you're trading or you're day trading and you only have 1 or 2 monitors, you don't need 4 monitors to look at equities, to look at this, to look at that. You could have a chart of 4 charts. You can have the ES, the NQ, the VIX is very important if you're trading the ES and NQ, and the weighted index. So that way, if I don't have my equity chart, right, all 6 of these stocks, all of them except for Tesla, is in my weighted index right here. Now, you guys can make your own personal weighted index, and how you would do that is you would come up here, and you would basically, you don't need the bats. You would basically plug it in like this. Let's just delete that. So you do, if you're doing specific amounts of stock, you would do, let's say Microsoft is 8.50 shares of Microsoft, so 8.50 star Microsoft plus 8.18 star Apple. And you could find these exact measurements if you just look up S&P top 10 holdings or NASDAQ top 10 holdings by percentage. Then it'll tell you how much percent-wise is weighted on Microsoft, on Apple, and you're able to then say, okay, I want to see more Apple than I want to see Amazon. Now, another way you could do this is if you want to just do the charts themselves, you don't have to do specific amounts of contracts. You could do it basically Microsoft plus Apple plus Amazon plus Tesla plus NVIDIA. And you would hit enter. You wouldn't, it's not going to, when you're searching it, it's not going to come up over here. You're just going to hit the enter button on your keyboard and that will bring it up. Once you have it up on your chart, I recommend hitting the 3 little buttons up here and then add it to your watch list. Once you add it to your watch list, you won't have to look it up again. It'll be right here in your watch list area and you'll be able to click it and it will bring it up for you. Hey, absolutely, man. Zach, it's been a pleasure. Have a great day. Hit that like, hit that subscribe. I'll see you next time. So look at this, guys. Again, we say, oh, well, I want to go short. I think we're going lower, but we're shorting the lows. And what happens to people shorting the lows? They, boom, get stopped out. It is not worth it. Be patient. Wait for your setup. Make sure everything hits your criteria. Every trade. And guys, if you take a losing trade, don't feel that FOMO that, oh my goodness, I lost a trade. I shouldn't have taken that. I got to make it back. No, your next trade has nothing to do with your first trade. As long as you're able to have proper risk management, you limited your loss on that losing trade, you got to just shrug it off and move on. That's what's so great with having a 2-to-1 or higher risk to reward ratio, because once you do have that, you're able to take maybe 1 or 2 losses and make it all back and then some after just 1 win. And how great of a feeling is that to know that you don't have to stress, oh, I got a trade wrong. Oh, I got another trade wrong. That's okay. Oh, I took another trade. Boom, this one hit my 2.5 to 1 R risk to reward. Now I'm up 0.5 risk for the day. Even though I'm 1 for 3 on my trades, I'm still profitable. Whatever the case may be. And obviously, the higher risk to reward you have, the better off you are. That doesn't mean you have to only take 4-to-1s or only take 3-to-1s. It just means that these setups are a bit more helpful in keeping us in trading in the long term. Let's see. So NASDAQ. Now, something else I noted with NASDAQ is NASDAQ had a supply zone up here. Now, yesterday, NASDAQ the supply zone worked as our highs at first. So when we had the short position up here in NASDAQ, I was looking for a scalp, but it didn't quite give me a good entry. I do remember I took it short and it sort of wiggled me out for like, I think it was like 60 bucks. But regardless, it could have been a nice trade, but it happens, right? If it didn't hit my criteria, it didn't reach everything I was looking for. We could take a look at NASDAQ back there near 780 to about 790. 780 to about 790. We could see if we have passive sellers up there. That could have been a possible hint to take these shorts. So here this is 1108. So this is right over here. I'd much rather see what's going on further back. No, it might not show us. Let's see. Okay, so here we go. We did have a passive seller here at 88. Seller at 88. Look at that, guys. That was our highs on NASDAQ today. So once we saw that seller, if this was something, if I was looking at Bookmap on NASDAQ at this point, I probably would have saw us reject this passive seller. Our pullback and retest of that level would have been our entry, and our stop loss would have been right at the top. So our entry would have been about 85, and our stop loss would have been about 95. A 10-point stop loss on NASDAQ would have been able to capitalize on at least a 40-point move there. Huge. That's a 4-to-1 risk to reward right there. Again, you're able to take 2 wrong trades, 3 wrong trades, take 1 right trade, and be profitable. How huge is that, guys? It is major, so important. Cannot emphasize that enough, how important risk management is and following our rules and setup. Every morning, guys, I come in the market, I do my supply and demand, I mark out previous day high, previous day low, I look at how recent price action was trading, and I also like to use a tool called Edgeful. Now, Edgeful is a statistic-based platform, and basically what it does is any type of stat you could think of, whether it's a fair value gap, performance by weekday, green and red days by weekday, gap fill, it tells us what are the odds that we either fill the gap or don't fill the gap. So here's ES's gap fill, and it tells us gap fill is 100% already. It was filled, and it even gives you a bias, right? Now, if you wanted to customize it, you could look at gap fill percentage. If you want to see if it only fills 50%, how often does that happen? You could look at gap fill by size as well, and that tells you, okay, well, my gap fill is, let's say it's like a percentage. So it goes by percentages. So it's, let's say the gap fills 0.23% on NQ. You'd come over to the 0.2 to 0.39, and it would tell you the odds of a gap down getting filled and a gap up getting filled. And that's really helpful for us day traders because we can know then statistically what are the odds of it moving in our favor. A tool that I really like to use on Edgeful would be the previous day's range. And that basically tells me, hey, if we broke previous day high, we have a 70% chance of closing green. If we broke previous day low, we have an 80% chance of closing red. Once I start seeing high odds in my favor like that, that's when I really like to use that opening price level to find a really good long entry or short entry, depending on direction of the market. Guys, this has been a fantastic Futures Fever episode today, guys. Make sure you're hitting that like, hitting that subscribe. And don't forget, guys, before it's too late, fill out that form in the comments for a chance to win a free Apex evaluation account. That's any account size you want. 25K to get started. You want to go somewhat heavier, do 100K, 150, 300. Free evaluation account for you if you win. So make sure you fill out that form below. Don't forget, guys, join me at bullishbears.com. You can join our community. I go live every day there from 8:30 to 11. All right, guys, I do hope this all helped. So we got 5 minutes left. So any questions, guys, please let me know. But what I'd like to look over real quick would be oil. And the reason I want to look over oil is to show you guys how indecisive it's been. Now, oil has been in, and when oil ranges, that's fine. I love trading oil when it ranges. But the range bound, the inconsistency, and the uncertainty provided to crude oil lately, since I would say early April, this is when we had our Liberation Day, oil has not known its ups or downs, highs or lows. It's been breaking previous day high, closing red, breaking previous day low, closing green. It has been ridiculously inconsistent. And because of that, I haven't been taking any trades on oil. I think I took my first trade on oil yesterday for a short, and it was okay because it was in a supply zone. But it's just been so inconsistent, it's really hard to trade something with that much uncertainty. And the reason oil is so strongly affected by all of this uncertainty globally is because of tariffs, as we all know. Oh, thank you, JG. Appreciate it. Absolutely. Yeah, oil's a tough one, man. I'd love to. Oil above $65 a barrel, bread and butter. I absolutely love trading oil. I've been trading oil for years now. It's really been great. I love it when it's range bound. It's sort of an easier read. We have to think too, guys. Oil markets, those have nothing to do with ES markets. Gold markets, nothing to do with ES markets. The only correlation, if that, on gold and ES and NQ would be once there's uncertainty in the stock market in whole, large cap, small cap, things in general. A lot of institutions take out their investments from those stocks, from those portfolios, and put it into something with a little more certainty, and that is gold. Gold is something that historically has had a very strong backing. We are just recently at all-time highs on gold, but if we're zooming out, look at this, guys. Even from 2022, we were at just 1,900 a barrel, market at 2,000. We're over 74% up from just 3 years ago. That's 3 years ago, 4 years ago, I don't know, 3 years ago. That is an absurd return. And we're not talking about a crypto here. We're talking about gold. Gold's the gold standard, as they say, right? So with that being said, gold is something I always keep an eye on. Oil was something I keep an eye on too, but until we're able to get back above the 65 area, it really is a difficult trade for me. Oil hasn't been able to remain below $60 a barrel for a long time, for over a couple of years now. Now that we struggled down there, but now that we're trying to move higher, we're struggling to move higher. So that tells me, again, there's a lot of uncertainty and there's a big dilemma. So think of it like the bulls and the bears. They can't make up their mind. Buyers want to accept price at a higher level. Sellers want to accept price at a lower level. Institutions, nobody knows. Oil is a no trade zone right now, and that's okay. We got to be able to recognize when that happens. Now, guys, let's take a quick look, see if we have any economic news coming up. So today was Wednesday. We had ISM services. Monday, we had ISM manufacturing PMI. Now, guys, did you know there are 2 different manufacturing PMIs that come out every month? We have the ISM manufacturing PMI, which comes out the first business day of the month. This tells us how that recent month was manufacturing-wise. Then we have S&P Global Flash PMI. Flash PMI is the one that comes out about mid-month, mid to late month, and gives us a clue as to the economic momentum. So if we see that the flash comes in pretty strong, we could sort of hope to gauge that, our final ISM is going to come in strong as well. Now, something we got recently was, I believe it was May 22nd, we had our flash manufacturing come in. And when that flash came in, it came in positive. But now we had our ISM manufacturing this Monday, and that came in negative. So even though our flash looked a little bullish, our manufacturing said, no way, no way. We are lower for the first time since 2024. So where's our manufacturing? When are we coming back, guys? I don't know. Make sure you hit that like button. Drop a comment if you think something's going to change. Obviously, with all this tariff uncertainty, companies don't know what's up or what's down. So if the big companies, big institutions don't know, we don't know either. Once they know and they have more certainty, then we're able to really execute more properly and have more confidence in the market. Without that, we just have to sit on our hands, be patient, and wait. Guys, I hope this Futures Fever helped you. Whether you learned something about supply and demand, order flow, market analysis, love you all. Hit that like button, hit that subscribe, and I'm going to see you guys next Wednesday. Take care, everybody.